Hello, everyone, and welcome back to the Winnipeg Market Watch podcast. This is our 11th episode, and today we're going to be breaking down the market data from October 2024. In addition, we have a very special guest here, Rashawn Brown with Investors Group Wealth Management, to talk to us a little bit about his background in sport, his work as we're going to get him to explain it because we just had a pre-conversation before the podcast about what specifically he does versus what he doesn't do. But long story short, it is going to be a very, very interesting episode here. So without further ado, Rashawn, I'd like to welcome you to the show.
Thanks, Keenan. Really appreciate you having me.
Excellent. And Denzel, how are we today?
Feeling pretty good. October was a solid month. And I'm looking forward to go over the numbers for the month of October and get everybody tapped into what's going on in Winnipeg.
As am I. So without further ado, the moment everybody's been waiting for, the October Winnipeg benchmark price came in at $418,100, which is down about $700 from September, which was $418,800. That leaves us up about 10.06% year to date, down about 0.17% month over month, just under 1% from the all-time high, or from the 2024 high, and 2.56% down from the all-time high. Now, looking at this is about the third straight month that we've essentially had flat pricing in the Winnipeg market. We've hovered very close to our yearly high for several months. And as I stated in the article, I believe that this is driven by several factors, including but not limited to significant interest rate cuts, buyer urgency, severe lack of supply, partly the weather, but also the macroeconomic environment with other assets tending to rise at very fast levels. And I think to some extent, too, the political landscape we're seeing here in both Canada and the US. Denzel, are you surprised at any of this? And what do you think is driving this strong market in the late season here?
Well, I definitely am surprised. I think that a lot of people were expecting this to be typical of a November, really slow, or sorry, October rather, just more slower, less sales, people trying to prepare for the winter as it's, harsh in Winnipeg. I think that the weather actually has something to do with this though, because we just probably had one of the nicest Halloween evenings that I could remember in the past 10 years. Every Halloween here in Winnipeg, it's almost always snowing, but this year it was really nice outside. Like me and my family were able to go outside, 7, 8 o'clock at night, and it wasn't a problem. Sometimes you're wearing like your winter coat and things like that, and you can't really see the costumes. But, I do think Halloween aside, I think that is a driving factor as to why we're having more activity. People feel like they have more time, and I don't think that Winnipeg winter has truly started to kick in just yet.
I could not agree more. And I know as an agent, it's way easier to get people out to see houses when they're not needing to bundle up and put boots on, boots off every time you walk in the door. But also, I would say from a seller's perspective, they feel a lot more encouraged about showing their property when it's not covered in snow and when it's not super cold. There's just very limited fear on both sides of the table right now. But getting ahead of myself a little bit, breaking down the data, when I look at the listing activity, there are actually about 20% fewer homes on the market than this time last year. And on a month over month basis, it's almost the same thing yet again. Denzel, with supply being so low, as somebody that both sells and buys real estate, do you think a part of this is seller psychology waiting for the interest rate cuts to really take effect and drive the market next spring? Or do you think there's just fewer people out there who are willing to part with their properties right now?
Yeah, I think there's a lot of sellers out there who are torn between, wanting to sell and then look for something else because prices have, uh, although it's only been, 3, 4 years maybe since some of these people bought, to think about getting into a new property with the newer interest rates, it's more expensive. That mortgage payment isn't any cheaper. The inventory and the choices aren't exactly um there isn't a whole lot, right? Like every MLS area is tight still to a certain degree, except for some of the more starter areas. Um, And so I think that people are just having a tough time selling right now because, well, first of all, it's fall. And most people's psychology is just not to sell in the fall and wait for the spring so that they can get a better outcome. Um, and Christmas is around the corner too, so there's just a lot going on. On the buy side, though, I do think that there are maybe not, I've been doing a lot of stuff off market lately, but in regards to what's available on the MLS, I do think that the people out there shopping are looking for a deal right now, and even with the investors, there's still not a ton of options.
Hmm. No doubt about
Yeah.
it. And with a sales to current listings ratio of 85%, that's just a testament to, first of all, the high level of activity. But second of all, the supply coming in and the new supply is actually lower than it was in any October, including during the pandemic era. So with that increased level of activity came actually a higher average price than we saw last month by a very significant margin. Um, I've always said when the average price that is being sold in any given month greatly exceeds the benchmark price, it's very likely that the next month will actually see an uptick in the benchmark price. Now, in November and December, seasonality often takes hold and those numbers generally trend downwards. When you see a spike from about 410,000 as the average sale to 427,000 as the average sale in 2024, what do you think is going to happen next month? Because to me, I find it hard to see even a 1% decline in a month that typically is one of Winnipeg's worst.
Yeah, it's interesting because I've also been speaking to a lot of other people who uh, flip houses here in Winnipeg, and they're seeing their houses go multiple. A friend of mine just had a house in Transcona, and he had three offers on his. There was another one in Westwood. There was seven on that one, and the market is really healthy right now. I think that with the interest rates, for those people who are aware of what's going on with regards to the interest rates in our economy and things like that, I think that they're trying to prepare to get into the market before things get crazy in the springtime. Because, we have another rate cut coming up in December. We just had a 50 basis point rate cut this past month. And if this trend continues, it's just going to become easier for these people to buy. And once word gets out and it becomes like a mainstream media talked about thing, we're seeing it everywhere, just like how we did back in 21 and 22. It's going to be bananas in the spring. That's what I think. But what
Couldn't
about you?
couldn't agree more. And I've been writing, talking, podcasting, YouTube videoing, writing, whatever you want about the fact that I think 2025 we will see the return of the all-time high pricing level. And looking at this late season data here, like we just saw our first month of the fourth quarter, the next 2 months are traditionally the worst of the season, and we are sitting with most homes selling under asking, like still 57.9% of them are going to sell below list, but the level of which they're selling over or at asking price is actually identical to what we were seeing in both February and March of this year, which I don't know if you remember that, Denzel, but I felt like almost everything was going multiple back in the early stages of the spring. And the fact that we're
Yeah.
seeing that in October might have something to do with buyer psychology, that they've just been conditioned to know that, when a house gets listed, expect to pay over asking. But I think a part of it too is there is genuine demand. With transaction volume as high as it is, it's hard for me to believe that this is a fleeting kind of 1 month only deal. I just genuinely think that the interest rate cuts have unlocked a lot of people's ability to afford stuff that would have been out of reach as recent as 6 months ago, to be honest.
Yeah.
Now, going and talking about specific MLS areas, this is what I found really interesting here. This October was one of the longest lists we've ever had for areas at 85+% absorption, with 24 out of 66 of Winnipeg's most active MLS areas making our hot list. Many other areas were very, very close to 85%. There was a lot between 78 and 84 that didn't quite make it. But the trend has continued pretty much the whole year where the Northeast, the South Central, and the West side of Winnipeg have been absolutely smoking hot to the point that specific neighborhoods are nearly impossible to buy a house in. Um, I don't know how close you've reviewed this data, Denzel, because again, for those listening, this article was just published at 8 a.m. today. We were recording on November 2nd, 2024. The data came out on the 1st. But after looking at some of these numbers, just as a cursory glance, what do you think about some of the areas of really high activity that we've seen? And are there any areas that you thought would be doing better at this late stage in the year?
Well, to be honest, Keenan, this list is so long, it's basically like all of Winnipeg is on fire.
Well, that is also true.
There's
Yeah.
just there's a lot of areas here. You know, I'm just glancing over some of these areas, and a lot of them are repeats, outside of maybe 5E St. James. I don't remember that one from last year, and maybe St. Norbert. But
Mhm.
this is just goes to show that when the Winnipeg market is healthy and striving right now. So for whether you're someone who's in the market and looking to sell your house, regardless of what area you're in, it's actually not a bad time to do so. Um, Keenan has me set up on a bunch of searches, so I actually track this day to day just to see kind of what properties are trading in the market. And supply is tight in most areas. There might be 10 houses with two of them with offer dates, meaning that you can't buy them until a specific day of the week. Everything else is stuff that's missed. And so if it's a good product, it's going to move. And I think this is just showing us that people are out there buying right now, and it's not a terrible time to think about selling your house. And on the buy side as well. I think that uh, for those properties that don't exactly sell on offer date, you might be able to get a deal done, because we're talking about how good the market is right now, there are some properties out there who are under marketed sometimes, and if you're a buyer in the market, you might be able to scoop one up if you're paying attention.
That is also true for those of you who are shopping
Mhm.
right now. Um, if you can find a product that you like, pulling the trigger today might end up looking like a really, really good decision, as there are many people out there that are planning to buy next year for lifestyle reasons. And
Yeah.
rates are likely going to be lower next year. And we're already in a tight supply situation. This is a recipe for higher pricing. And as long as you can find something you're able to live with, it could be a very, very lucrative purchase at this point. But with all of that being said, when we have such unseasonably irregular absorption, it's hard for me to put any case to the market for both buyers and sellers other than we're moving in a very seller favored direction at this point. And again, as I've talked about in previous articles, previous episodes of the podcast, and other YouTube videos, a lot of this is actually based on very high level decisions by government, our central bank, etc., that weren't really made with Winnipeg in mind. Most of the
Mhm.
decisions impacting us were made because of Toronto or Vancouver or Ontario or other parts of Canada. And we, as a stable market that doesn't generally move this way, have been impacted in ways that probably weren't expected, or at least not given regard to by the decision makers there. So, with all of that data being presented, I'm curious from actually the both of you. Rashawn, as a non-real estate guy, what's your take on hearing the October update here and the conversation that Denzel and I just went back and forth on?
Yeah, it's very interesting to hear. Obviously, you guys are two guys that I respect in your industry, and from my perspective, when I'm dealing with my clients, a lot of us deciding how we're going to react to what's already happened in the market in the real estate market. But I don't normally get this insight unless I'm listening to your podcast, of course, of why it's happening from that perspective. So it's really nice to be here and hear that. So for now, I'm just going to be a set of listening ears, and then when we get more into the finance space, I will pipe up. But no, that's awesome information to go off of there.
Excellent. Well, I'm glad you find value in that. And Denzel, any closing thoughts on the market data before we get on with our interview of Rashawn?
Yeah, I just want to let everyone know who's buying property to for business reasons in the next 6 months to load your bases now, because it's going to be a fun spring for those of you who are able to get in the market. I think that after seeing what happened in from 2020 to 2022, I've never been more focused on knowing and trying to be forward thinking in what's going on in the market, trying to be there before something huge when it comes to investing. Um, and these market updates are awesome because it gives us some insight to see where things are headed. And in all of the past 5 years that I've been doing this, I never once had a spring that was underwhelming. It's always been busy. And spring this year actually went from, I would probably say like mid-January. People might think that the market wasn't doing anything, but in mid-January, it was nuts. I had one of my best outcomes in a flip during January, me and Keenan. And
Yeah.
that's like right after New Year's, people are looking, and we had, I don't know, like 40 private showings and 100 people through an open house on a little house in St. Vital. So
Mm.
if we're thinking about, okay, well, what's going to happen when homes are more affordable because the interest rates are going to drop again, and we're going to start seeing every other realtor start posting about how the interest rates have dropped, people are just going to be super excited. So I think that if you can get into some investments at the moment for the short term, even long term too, I think for the buy and hold people, it's actually pretty exciting to see that these rates are getting a little bit more forgiving.
Mhm.
Yeah, to act now, because it is going to, if you don't have lead generation, or if you don't know a guy like Keenan, to get you in front of these opportunities, it's going to be a bloodbath on the MLS trying to buy something. So that's my opinion.
Very valid, very valid. And I would encourage any of you out there listening who are either thinking of buying or selling in 2025 to at least reach out to me for a consultation about what you think you might do. And I can help guide you to make sure that the decisions you make are, first of all, sound. And second of all, that a strategy can be executed to achieve your goals. So with that in mind, that brings us to the end of our market update portion of our episode. And now I'd like to give a proper welcome to Rashawn Brown. And I'd like to start this conversation by just getting Rashawn to give us a little bit of background about yourself. I want to hear, first of all, how did you get started in your industry? Describe what your day-to-day is like working in the job that you work, and let us know what led you to the path that got you to where you are.
Gotcha. Well, first off, guys, thanks for having me. As you mentioned, my name is Rashawn Brown. I currently work at IG Wealth Management, and I am one of the registered retirement consultants there. It's a lot more fun than it sounds. Essentially, on a day-to-day basis, I get to meet with clients and kind of show them the pros and cons of any financial decisions they might make. We do offer, the products that your bank does, the TFSAs, the RSPs, those kind of things, as well as many others. But I describe those, Keenan, as the puzzle pieces, right?
Mhm.
And
Yes.
I find often when I meet clients, they might often have these puzzle pieces, but they don't have the box that the pieces came in, right? And when I say that is the box that the pieces came in often has a picture of what those pieces are supposed to eventually be put together to look like, right? That retirement picture is what my job is to help them put together. All right. You asked me a few other questions there. Sorry,
Yeah.
I'm gonna
No, it's
get you to
okay.
repeat.
It's okay. Well, so the background about what you do is going to be really important for people to understand. So great start with that. But I
Mhm.
think what everybody is going to be curious about is what got you down the path to choose this line of work and into the career that you got in.
Gotcha. So that would have to be that'll be a long discussion, but faster version of it. I was
Yeah.
an athlete, was playing basketball. It's actually how I met Denzel the first time. And I finished off my career at U of M. I was actually a psychology guy with a minor in business, so it's kind of backwards in terms of how most people would start the career. Most people would be finance and maybe have another minor. But When I had finished playing basketball, I was talking to an alumni knowing I wanted to get into the business space. And the first thing after a very short conversation he said was, well, why don't you come check out, what it's like at IG? He knew I wanted to kind of get into the finance space. So I quickly just kind of jumped on it and started working with him. And before I knew it, I was kind of running my own practice, and things have been going well ever since.
Well, that's excellent. And
Mhm.
that's a really good background bit here for everyone to hear. Um, so I'm going to let Denzel have a conversation with you about the basketball part, because I know that that's been a huge part of both of your lives individually. And
Yeah.
I know I'm curious to hear a little bit more about that. But Denzel, was there anything specifically about the basketball portion of Rashawn's background that the two of you share that you'd like to bring up here today?
Yeah, for sure. So Rashawn, basketball has been like a huge part of our lives,
Mhm.
and a major driving force in your business and psychology. Why don't you let the listeners know some of the benefits that you've experienced in your working life, which you've derived from your time in sport?
Yeah, I'd say, good question. Basketball had been such a big part of my life. It taught me so many things, but it also, when you put so much time into one thing and ultimately it isn't what you end up doing for the rest of your life, you don't really know what else you are, right? And I feel like that's probably something a lot of athletes go through as they're, phasing out from the whole basketball thing or whatever sport it might be into the next phase of their life. So essentially, what I had to do was sit back and say, okay, if I take away the skill part of basketball, what am I in this sport, right? I knew about myself that I was normally the captain of a team, which wasn't always because I was, the most talented, but because I had certain leadership qualities. I knew I could be vocal. I knew I could be energetic. I knew I could bring energy. Um, and from that perspective, I knew that I wanted to be in a leadership role of some sort moving forward in pretty much the rest of my life. So, uh, that given being the case, I was able to take those qualities I learned kind of in the basketball, how to communicate, how to lead, how to, stay focused on a task and those kind of things. And pretty, I'd say seamlessly, relatively seamlessly, move it over to the finance world where I'm running a practice now here.
Yeah. I love how you broke down who you are as not just a basketball player, but just as a person while using basketball, because and before we jumped on the podcast, I was just telling you that there's so many guys, whether it's basketball, archery, or whatever sport that they play at a high level, they they put so much time and energy to being great at the sport that they play. And the minute that it stops, it becomes so challenging to find out what your purpose is.
Hmm.
And I know that for me, um, I know that I like to work hard. I like to
Hmm.
do things that were challenging. And so when I was taking on the endeavor to build a real estate business, which just thinking about it now, it was crazy for me to even just take the leap because there's so much moving parts in real estate. But it's the grind that I love the most.
For
If I
sure.
think about how much time and energy I put into basketball, waking up early, getting to the gym, getting my workout in, my first one of the day, whether that's like shooting or working on like any part of my game, just the dedication to improvement, I think is what I fell in love with the most out of everything. And then
Hmm.
so
And
and then you think about, oh, sorry, go ahead.
no, I didn't mean to cut you off. I just what you said just now was just so interesting because I kind of think of it as there's two different kinds of people when they're done, right? Like you essentially what I'm gathering is, and I know you personally, you got to a pretty high level of basketball and what you're able to do with it, right? And
Mhm.
you essentially there's two types of people. There's people that are okay with starting at zero again because they know that they have the ability to build back up to what they were, right? It's the same with any
Mhm.
other kind of business, right? If I said to Keenan, who's great at what he does, hey, Keenan, I'm taking away everything today. You can no longer do real estate, right? I have no doubt in my mind that he'd be able to start from zero and pick up finance or pick up, I don't know, just anything, right? And it seems like you've been able to do that. The flip side of that coin is, man, I've worked so hard at this thing and that's all I am. Like I can't do anything else. It's like, no, you have all these skills. You just got to be willing to, humble yourself for a second, take a step back, and if you can turn into the real estate version of what Keenan was as an archer, well, sky's the limit, right?
Yeah,
And
100%.
likewise for you guys, by the way, like if you had to jump into whatever else, I have no doubt in my mind either that the both of you would be incredibly successful at whatever the other thing was too. And I think that just goes to show the tenacity that comes with being a high performer in a sport, first of all, but then second of all, being a high performer in a sport and translating that into any business is a recipe for success. And I know that for myself too, transitioning from athlete life to business life, entrepreneur life, running day-to-day work kind of life, a huge part for me was lifting weights. And that's what really was the engine oil that kept the engine going. It was the lubricant that made things work in the long term for me. And the reason is it gave me that psychological itch to scratch, I guess is the right way to put it, to make it feel like I was still progressing in something physical. It gave me that back of my mind alternative goal besides whatever I have to work, for money for. And it made the transition easier for me to do that. And I know the both of you are still very much involved in fitness. And I know you both lift weights. And while I look forward to one day having a workout with Rashawn, I know I work out with Denzel a fair bit. So I got to say, I found immense benefit in that. And I'm glad that you guys have managed to walk the same path in that regard with sport, fitness, and of course, business as well.
For sure.
Yeah.
Yeah, 100%.
Or go ahead, Denzel, if there's something you want to add to that.
I was just going to wrap that question up because that was a super loaded answer. Thanks, Rashawn. That was awesome.
Problem.
Excellent. Excellent. So I'm going to talk now a little bit about your work specifically at Investors Group and some of the things that, at least from my perception of what you do, the clients might be talking about. But I'll say this, in my world, there are a lot of people who see real estate as the only investable asset class out there. And I think this comes from several things, but some of them just don't trust other people with their money. Some people don't understand other markets. Like they simply do not get the fact that, why is this stock rising or dropping in price? That they can't comprehend that. Or some of it is just sheer ignorance. They're just not educated enough to understand. So what I want to ask you is, keeping in mind that there are people like that, especially in the real estate world, tell us a little bit about your approach to giving advice and investing and the importance of diversification for those who are heavily invested in the real estate market and how that might actually be able to benefit them while they hold their properties, but can also hold other stuff as well.
For sure. And you and I speak about this all the time with just the whole, diversification, and people that are typically on my end of the spectrum, don't always want to dabble into the real estate and vice versa. But, diversification is key. Not all markets are moving in the same direction at the same time, right? So, having a little bit of eggs in each basket is never a bad thing. I think some of my most successful people that I deal with on a daily basis, when I'm planning for them, right? I plan for their stuff that's, with me, but I also plan for their stuff that's elsewhere. And that might be, funds in another institution. It might be real estate. It might be, right? So when I'm talking about painting that picture that I was talking about earlier, it's not necessarily just with the money that they have with us, right? It's about setting a goal and making sure you have the eggs in the right baskets, right? And not too much of them in one or the other to kind of reach whatever goal it is that we're trying to achieve here.
Okay. Well, that's a good answer. And I know as a realtor, I often find myself dealing with a real estate investor who doesn't actually have any material savings anywhere besides property specifically. And,
Right.
In 2021 and 2022, that happened a lot. And I talked to those people and they would basically say like, well, why else? Why would I buy anything else? Like there's not a good enough reason for me to buy anything else. I have this fear, et cetera. And now some of those same people are coming to me and saying like, you know what, I'd like to actually take some chips off the table. I think that it would be better if I had a lot of real estate still, because I understand and think real estate is going to be a really good investment in the future. And I personally believe that, by the way. But they also say, I think it's also important that I own some other things too. And
Definitely.
do you have anything specific to say to those people?
Yeah, so a big thing that we focus on would be the risk tolerance. It seems like, for whatever reason, people are taking the chips off the table. And I see it happen in our world when they move from things that are a little bit more equities focused to things that are a little bit more fixed income. So from my perspective, right, like I said, eggs not all in the same basket, right? If I'm talking about just my perspective, I really like mutual funds, right? And somehow that has become a dirty word to people. I think it had to do with the whole COVID situation where, we were getting all that money from the government and everybody was winning, right? You put anything on Blockbuster and it's shooting to the moon, right? But what we've seen since is that people aren't quite as good at, you know, choosing their own investments as they thought they were, right? And I'm getting a lot of people that are now starting to come to me that thought they could do it on their own to begin with. I'd also like to highlight the fact that my job isn't actually to manage the actual investments. We have money managers that handle that. But I digress. The reason I like the mutual funds is because you get a lot of, and they're risk rated. So we do a risk analysis. And if you were, say, a moderately aggressive investor, we might have you in something that might be for, say, 70% equities. So for people that might not be aware, those are more of the stocks that are, a little bit more volatile, but they're meant to grow. And then we might have 30% fixed income, which would be more of your bonds and things that are more related to lending, right? So that being said, it is important to have a little bit of everything, right? And I think the mutual fund offers us the ability to kind of save, as Keenan's mentioning, but without taking on too much risk.
And I think that's excellent for everybody to at least consider in their investing journey. Like Denzel and I started this podcast, and all of the people who we've brought on are people that are passionate about helping others make good financial decisions and also making good financial decisions for themselves. And at least I'm going to wrap a question into this response here, Rashawn, but at least my understanding of what you do day to day is you help people make good decisions with their money. So specifically, a lot of our listeners are very young. I'd say I don't have the actual data on this, but from the people that actually talk to me after these episodes come out and discuss the items that we bring up in these podcasts, my understanding is the vast majority of listeners are under 35. And a lot of these people have quite a bit of money. A lot of them have not much. Can you give us a little bit of information about what some of the best things you can do for young investors are, and specifically, what would be the main benefit of forming a relationship with a licensed advisor like yourself look like for a young person with or without significant assets?
For sure. So without would just be to, kind of get somebody started. You'd be surprised what saving even, a minimal amount of money and getting it into the markets can do. I always go by the slogan, pay yourself first. That doesn't mean like you're taking your money, putting it from your right hand and, passing it to the left. What I mean by that is you got to pay the future you, right? There will be a point, whether it's because you're older and you're retired or you've become injured or whatever the case may be, sick, where you can't work anymore, you can't generate any more income, right? So you have to pay the future you. I don't care if it's you're saving thousands of dollars a month. I don't care if you're saving $50 a month, right? Essentially, what I would do is, okay, what can you afford to save, right? Let's pay yourself first. And I'm going to show you what it looks like through our software if you continue this for the next however many years the person has until they need to reach that goal, right? And we invest it and we make sure that they're protected by things like insurance, which actually brings me to a thought that just popped into my head. I'm going to throw you a question, Keenan.
Yeah.
So what would happen if, somebody had, the real estate with you, which they definitely should, and something were to happen? Like, not everybody has the proper protection. Would you agree?
100%. And I've helped several clients, without naming names, unwind portfolios of people who had untimely deaths or illnesses or lost their ability to work. And I can tell you right now, those were not fun times for those sellers.
100%. And then from my side of the thing is, why I like us to work together, which we do, is, I can kind of show clients, hey, the insurance piece where, hey, if you don't have any insurance, this is what happens to the assets that you hold. If you do have insurance, well, look at the situation that you're in, right? And I can show them with pretty colorful and nice, pretty charts to kind of show them the ramifications or benefits to either decision.
Mm-hmm. And I will add too that I think it's under discussed in investing
Definitely.
for young people, the insurance aspect about it. And if you are a high performer, especially early in your career, as a non-licensed advisor, I'm just a realtor, okay? I would highly recommend have at least a conversation about life insurance and at least consider the downside, because it can be a very, very big difference, especially if you have mortgages or if you have other obligations or a partner. You might want to look into that sort of thing. And people don't talk about it because it's a little grim and it's not very, it doesn't have the sex appeal that like flipping a house or buying that hot stock seems to have, or the crypto or whatever's going on these days.
Mm-hmm.
So, from your realtor to you, I highly recommend you at least consider that. So kind of in the same vein here, I'd like to just transition this to another question about your own finances and your own life, because you're also a young guy who's doing really well in business. And I think a lot of people are going to be curious, as somebody with the job that you have, first of all, do you manage your own money? And second of all, if you're comfortable disclosing, can you explain your own personal investing philosophy and some of the strategies that you've made a priority for yourself?
Mm-hmm. Yeah. So, yes, one, I do manage my own money. Two, when it comes to the investment side, I'm a really big believer on almost turning myself into a bit of a robot, right? When I'm going to make an investment decision, there's only a few things that I should consider. One of them heavily being, how long is it going to be until I need to access this money, right?
Mm-hmm.
So I'm 29 right now. I like what I do, so I probably won't retire until I'm 65, give or take. Could be longer, whatever, if I still enjoy it, right? That being said, I'm not using this money anytime soon. So I'm okay with, and my stomach can handle a little bit. Like I'm okay with seeing the number go up and down as long as I know long term it's going up, right? So given that fact, I'm a little bit more of an aggressive investor. And like I said before, I do love mutual funds. I think that, they offer great returns. I think that's a misconception. People think that you can't get good returns out of mutual funds. I would just argue that you're not holding the right mutual funds. But yeah, that's what I do. I trust the money managers at IG. We've got a great investment team spearheaded by a guy named Philip Peterson. He's awesome. He's been on BNN and he runs a podcast of his own. And I trust them to kind of make the investment decisions within my risk tolerance that I've selected for myself. And if it was for another client, I'd help them, figure out what their risk tolerance was, to kind of give them the same advice I would give myself.
Excellent answer. I think a lot of people should really listen to that, and specifically to the part about for the risk tolerance I've understood and selected for myself. Because I think that might be a piece of the puzzle that a lot of younger folks, at least from my experience, tend to miss, is they seek the maximum return without considering the downside.
Yes.
And I think if people started there, it might work out better for them in the long term. But too many people skip that first step of what can I actually bear if things go wrong.
Correct.
And, I wanted to highlight that part because you said it at least a couple times in your answer, but it is really, really important. So
yeah. And Keenan, on that, before we leave that topic,
sure.
Often the reason that what I find with younger people, the reason that they make changes in their investments often is because their friends talk about, oh, I just made X amount of dollars on this stock that you should try, right? First off, if you're hearing about it from a friend or you're hearing about it in the news, it's probably too late. You've probably missed the rise, right? Second off, your friends probably aren't telling you about when they lose, right? You're probably hearing the positives, right? No investment goes up in a straight line forever, right? So that's something to keep into consideration, right? You might want the returns that you're hearing about from your friends, but if this is a shorter term investment or your stomach just can't handle seeing the line go up and down a little bit, right? You probably don't want to get involved with what they're holding.
Fair enough. I think that's a really, really good thing to highlight as well. And in the same vein, one of the questions that I kind of pre-selected for this podcast, but I think this is the perfect time to ask this, is what do you think the biggest money mistake people under 35 tend to make? Or kind of in the same vein, do you ever find yourself giving advice to younger investors and feeling like, yes, this is good advice, you should take this, you should do this, and then they consistently ignore it?
Okay, first one. So again, I think I go back to the pay yourself first, right? And then I think that ties well into the second part of your question is that like, you know, the advice that I give is, you know, save a number that you don't believe that you're going to have to touch, right? If you put money into the markets and the plan is that we're investing it for retirement, you and I have done an IPQ, which is an investment profile questionnaire, which gives me a gauge on how you are risk wise, and you score, you know, let's say moderately aggressive again or aggressive, right? Markets are going to go up, markets are going to go down. If this is money that you continuously have to withdraw from, right? We plan for you to be up a bunch in 65 years. If you're taking it out next week, right? We don't know exactly where the markets are going to be. And I actually probably wouldn't invest. I wouldn't recommend that somebody gets into the markets with money that they want to use next week, right? So I would say the biggest mistake or the biggest thing that people don't listen to that are younger is like save what you can afford to forget about. Like you're not putting it in a bank account, take it out, right? And I have people that's a different story. But like for the younger people that are saying, you know, I want to be able to retire comfortably. I've got a lot of time. Now is the time to start. Put aside an amount of money that you're not going to have to touch, right? Because sometimes I see people, you know, they put in the market, there's a down week, you end up losing money, right? And it was like, well, that wasn't necessarily the plan. And if we had waited 60, you know, the 30 years or whatever it might have been, you would have been way up by that point, especially with the compound interest from you continuously, you know, contributing monthly or weekly or whatever the case may be. That would definitely probably be my number one thing.
Okay. Well, those are all super valuable.
Mm.
I'm going to ask a question that's also related to this, but I actually kind of want to ask Denzel this question too, because I would
Okay.
like to hear how he would go about answering this. And I mean, I think your answers are going to be different, but I think there would be a lot of similar responses here.
Okay.
So both of you, if tomorrow you got reset to zero, you have no personal assets whatsoever, but you retain all of your knowledge and all of your skills, what steps would you take to go about rebuilding what you have? What would be your main financial priorities? How would you position your money? Would you be willing to take on leverage? And what sort of investments would you be making?
Rashawn, you could go first on this one.
That's a tough one. Yeah, what would I do? I think I would go right back to IG. I do love it at IG. So I'm assuming I'm making like, do I have nothing back? Like I'm back to zero. I have no clients. I'm
Back to zero, full
back to
reset,
zero.
full reset. You know everything. Your head is
Yeah.
the same. You have all your knowledge, but you don't have any contacts. You don't have any money, no capital at all, and you got to
Yeah.
figure it out.
I think step one for me, I'd probably go to rural areas and I'd probably try and put on a bunch of seminars, just picking different financial topics that I think they could find interesting, whether it be, you know, the result of, you know, farm sales and how taxes would work with that. I'd probably try and bring some sort of IG specialist with me. I try and find clients that way. See, this is a hard question because my business is so it's so client focused
Yeah.
that starting from zero, like I'm assuming then there's no capital to really put on like an amazing event to, you know, to try and prospect in that kind of in that kind of aspect. So yeah, I think that'd be my first thing. I'd probably try and go out to the country, get a little projector or something, put on some seminars, see if I can get some clients that way. And then once I start making more money, obviously it's a business like anything else. Probably try and put some money into the marketing. Once there's a substantial cash flow, then I'd get back into my own personal investing, you know, probably tax-free savings account first. I like the strategy of saving into a TFSA during the year. At the end of the year, we move that money from TFSA to RSP. This is super high level, by the way. I'm just running quickly through my
It's a
thoughts.
complicated question. Just run with it. It's all good.
Yeah. Yeah. I think that would be my play until I got back to kind of where I was.
Great answer.
Okay.
Denzel, how would you do it?
Well, I think if I didn't have the network that I do currently, and no assets. I'm back to ground zero, but I have all of the skills that I've developed over the past 5 years. I think what I would do is I would set a goal for myself to network with one person every single day who is involved in the real estate industry. I would do my best to find someone who is willing to fund my real estate investments. And in addition to that, I would do a ton of door knocking and whatever lead generation that I possibly could do that was free. So whether that's cold calling real estate agents, looking for opportunities, or door knocking or dropping off flyers, anything that doesn't cost any money until I'm able to build up a reasonable amount of disposable income for the business, and basically just keep stacking the days and try my best to build things back. And I do think that in the first month I'd probably pick up some good momentum because I don't know, I just once you real estate, the business that we're in, Keenan, is very repetitive, and once you have the formula for it, you could use that in any market. I could go to Ontario, Southern Ontario, in a place like London, or for example, and be who I am right now and probably figure it out. Just
True.
because of the knowledge I have now. And I think the biggest thing for us is once you have the ability to identify value in any market, the world's your oyster. You just have to do more marketing than the next guy and have the ability to close. And
Yes.
you'll be able to get things done. So that's what
Absolutely.
I would do.
No, good.
Network like crazy, market like crazy, and just keep going, because oftentimes for us, you put in a bunch of work and you don't see any results until 3 weeks later, and all of a sudden you have like 5 6 people calling you about business, right? But it's from the 3 weeks ago that you were doing your prospecting, you know
Could not be more
so
true. And on the
yeah.
realtor side, that is completely true as well, where the actions that you take on any given day as a realtor will likely lead to results in about 3 months, almost like
Mhm.
clockwork, right? Like
Mm.
that's just how it goes. That's the cycle of things. So I like that wrapped into both of your answers. The first step was networking and lead generating,
Mhm.
right? Like that
Yes.
was consistent. And I would say, like, if I were in the same position that I just asked, I would do it too. It would be about get out there and find opportunities to generate leads. Rashawn said that he'd put on events. He'd probably bring an investors group specialist with him to the events to kind of add value or help along with it. And as a realtor, if I were in that situation, I would probably attach myself to somebody established and say, hey, I can do this, this, and this. I know this, this, and this. Let me open house your stuff. Let me take your buyer call.
Mhm.
How about I'll write your listing, I'll upload it, I'll select your photos. All you do is deal with it for free. Like, I'll do these things to just get the opportunity to get in front of people. And that's the secret, right? So, in
Yeah.
your own ways, you have completely separate businesses and goals and endeavors, but the answers were actually virtually the same, just with different specifics.
Mhm.
Yeah.
So, for anybody out there listening, no matter what you're personally good at, whether that's finance, real estate, something else entirely, if you want to scale or if you want to get off a zero or just move up in general, start by lead generating, start by marketing, start by getting your name out there to others. That is step one. And then once you've done that, showing value and executing is all there is to it. And that's the secret sauce. Very simple.
It's almost the hardest and easiest part of the business.
Yeah,
Yeah.
absolutely.
Yeah.
For me, myself, like, I'm in my first few years of real estate, I didn't really have the confidence to properly lead generate because I didn't believe in myself enough. I thought that I wasn't good enough at real estate to be able to have these kind of conversations with people. But over the years, once I started to believe in myself and my own ability, it became very easy for me to talk to people about real estate or transacting in general. Um, and a lot of that is just self actualization. So you guys are all at that level too. And it sounds easy because it's just words, and doing it is actually hard. But a part of the doing it is believing in yourself.
Mm-hmm.
And that's where I think people need to get to the point of, I need to believe I can do it. And then once you believe in yourself, then anything can happen.
Mm-hmm.
So, not to get too philosophical here. It's a little early for that.
Well,
Yeah.
that's such a big part of like success though, the mindset. And I know that there's how many podcasts out there or books and YouTube videos on like, just you just have to wake up at 6 a.m. and do your ice plunge and whatever. But at the end of the day, it's
I think you cut out
that.
there, Denzel.
Sorry, can you guys hear me?
Yeah, you
Yeah.
just cut out after the ice plunge part.
Yeah,
wake
I
up
was just saying that
and do your ice plunge.
if you can persevere the tough times in whatever season you're having in your business, you're gonna be all right. As long as you consistently have the mindset of, I'm gonna figure this out and I'm gonna deal with this problem that I'm having, you're gonna be all right. And that kind of just goes back to sport for the three of us. You're having a bad shooting day, Keenan, or maybe Rashawn, we're not playing as good as we know we can. Like, how do you get over that in the short term, right? Like
Mm-hmm.
the conversation you have with yourself in your mind of like, okay, no, you are good enough, you are capable enough. You just gotta get through this next 5 minutes, and then all of a sudden it starts turning around because you have that positive thought, and that's yeah, it's a huge thing, and that's why it's talked about everywhere.
Mm-hmm.
No doubt about it. And honestly, for the athletes out there, you already know that if you're not an athletic person, or if you're not a person who has a background in sport, one thing that I've tried recently, actually inspired by Rashawn, was running. It's probably the toughest psychological battle you can have with yourself, because in your own
Mm-hmm.
head, you need to understand that, like,
Yeah.
yes, this is not comfortable. Yes, this is not necessarily the most exciting thing you've ever done, but you need to complete it. And if you get yourself to consistently, I find after about a mile and a half, I'm just good. But the first mile really sucks. Every single time, it's awful. But if you
Yeah.
can, in your own head, say, "Kate, we're just going to do it. We're just going to march. Just go one foot and then the next foot." You're going to be okay. You're going to get there and it'll work out. And the same goes in business, right? The hardest part is getting started. But once you're running in business, it's easy to continue. And people often ask me, like, Keenan, how do you have time for everyone? Like, you're doing all these things, you're talking to all these people, you're doing all these deals, you have all these people that are constantly going to need something from you at some point. And the truth is, I heard that question and I said, I don't even know, because it just happens. I just do. It's automatic.
Yep.
And I think for you two, it's probably the same, where you wouldn't consciously really know the answer to that. It just happens. And welcome to real estate, welcome to business, welcome to finance, welcome to lead generating. That is just what it is.
Yep.
Yeah.
100%.
So we're almost at our time here, you guys, but Rashawn, one thing that Denzel and I always ask our guests on this podcast is, if you had to ask us, well, first of all, if you have any questions for us, we want to ask you this too. But the main question that we ask people first, and I'll ask you this right away, is what is your grand ambition? Like, at what point in time do you think your story is complete and that you have succeeded and you have won?
Oh, I'm sorry if you guys can hear the dogs barking. Mailman's at the door here. My grandest ambition, I think, honestly, man, for most people, I think it all comes down to one thing: is just being able to adequately take care of yourself and take care of your family. I am newly, I guess not so newly anymore. It's been over a year now, married. I just, I strive to be able to take care of my wife, my two dogs, and make sure that kind of everything is comfortable. I think that for me is that's all. I'm a simple guy. That's pretty much all I need.
Comfortable, simple living. Okay. Fair
Yeah.
enough.
Yeah.
Love to
How
hear
about
it.
how about you?
I mean, I can probably quantify it mathematically, but this is going to sound a little arrogant, so just bear with me. But it's my grandest ambition. Okay,
Grandest. There we go.
I want to be in a situation where no one anywhere alive can tell me what to do ever. I want it so if somebody tells me to do something and I do not wish to do that, I can tell them to kiss my ass.
I get it.
And once I'm there, then I won. Then I'm just good. Okay.
Fair enough.
And I don't think that's going to happen, maybe ever. Just I don't actually think that's achievable because I think I will always be beholden to someone, at the very least, my wife. Okay?
I was about to say you are a married man, Keenan. You know that's not how it works, buddy.
So right, but I also consider my wife and I to really just be one person in two bodies, for what it's worth. Like when I talk about myself, I kind of wrap her into all of that too. Celia's great.
Gotcha.
Hi, Celia. I know you listen to these, and and you know, ultimately there will be other people like children and grandchildren, etc., where that just isn't going to be possible. But at least for the people not in my immediate circle, my grand ambition is to have that power. And Denzel, I know you and I have talked about this kind of thing before, but how would you answer that same question?
Well, I think for me, like Rashawn, having comfort in my family, I think is going to be is now, especially now that I have a daughter, not married like you guys, but I mean, I've been with the same girl for a long time, 14, 15 years now. And so we're basically married. And yeah, just being able to take care of my family is a big thing, but also being able to afford nice things whenever I want, go whenever I want, and just live a free life. That's what I thought. That's kind of my picture of success and kind of what my goals and dreams are. Just being able to go take the family out to a vacation anywhere in the world for as long as we want, whenever we want, is a dream come true for me. And then being able to come home and have a nice place that I live in. And it's not bad to want nice cars and stuff like that too, right? So all of those things are sort of what I'm aiming for. But I think the thing that keeps me going the most is 100% my daughter. Just seeing her, and I'm like, man, I just want to make sure you have such an awesome life, no matter what it is that you pursue. Like when you guys have kids, man, the love that you guys have for your children is just insane. It takes you to the next level. And I want to have another one just because I think that not just because I'm thinking of myself, but only I just think it's a beautiful thing when you really have a family, and having the opportunity to raise children is just awesome.
That's inspiring, and I'm very much looking
Very
forward
fulfilling.
to one day being a dad
Me
as
too.
well. So
Oh yeah.
that is definitely something to look forward to. I feel like a bit of
You're
a
a dog
dick.
dad, Rashawn.
I am a dog dad. I want to get them all the bully sticks they can possibly eat.
Yeah.
Rashawn's dogs are awesome,
Yeah.
by the way. If you guys ever get the chance to meet them, definitely ask if you can see them. They're great pups. But
thank you.
Yeah. Okay, so to wrap this up, Rashawn, any closing thoughts or anything else you'd like to ask Denzel or myself?
No, I would just say I think this podcast is awesome, man. Even if just for a space for young professionals to get together and discuss what's going on, because I think one thing, young professionals, we're gonna struggle at times. There's gonna be times where business isn't flowing how we want it to be, right? But when you get in circles like this and you're having these kind of conversations, you realize you're not alone, and other people are going through it too, even if it's in a different industry, right? So, we look at the generation that came before us who are now, where we want to be. Maybe they can still have people tell them no, Keenan, but but they're doing well, right? And I think it's because they persevered through these times that we're now navigating. So I think it's awesome for us to sit down, whether it's a podcast or hang out or whatever the case may be, and just remember that we are doing the right things.
I love that answer, and I couldn't agree more. I'm very thankful.
Well said.
I had the opportunity to have this conversation with the both of you, and Rashawn, from the bottom of my heart, I want to thank you for taking the time, and I am confident that we will have you back on here for a follow-up episode sometime in the future.
Sounds good. I'd love to do it.
Excellent stuff. Well, without further ado, then I'd say this is a good place to wrap it up. So to you listeners out there, thank you so much for watching. Remember to subscribe to the Substack. And if you want more information and more fun videos and articles, check out the Winnipeg Market Watch YouTube channel, which will be linked in the description. In there, we're going to break down the same information that we do in the market updates. But in addition to that, we're going to have a lot of other tertiary discussion about real estate finance and everything related to investing. Thanks again for listening, and I'm looking forward to seeing you guys next time.